Warren Buffett once said, price is what you pay, value is what you get. A very good evening to all. I would like to welcome all of you to the most momentous event organized by the Students Association of Financial Management. Investar 2022 returns do matter. Investor 2022 is an awareness and knowledge sharing session to enlighten the knowledge of our undergraduates about the Columbus Stock Exchange, opening opening a CDS account, and on how to trade securities after analyzing the charts and signals, and to improve their stock analytical skills, as it is important to get started with trading in CAC. It's my great pleasure to welcome Ms. Sapunika Ratnayaka and all the lecturers who are present here today. And I am truly honored to welcome our very special guest of today's session, Mr. Arumainagam Visahan, Head of Research, Asha Securities Limited, with 4 years of experience as an investment advisor and 7 years in equity research. He will be accompanied by Mr. Danushka, Manager, Kiribatgoda Branch, and Mr. Muditay Godavatta, Investment Advisor, Kiribatgoda Branch. Sir, we are glad to have you here today with us delivering this session to our undergraduates. Furthermore, I am pleased to welcome all the participants who have gathered here today for the session, and I cordially invite Mr. Arumainagam Visahan to take over the session. Over to you, sir.
Okay, so good afternoon to all. Thanks for the opportunity, especially the university and the lecturers and students. So due to time, we'll straight away go into the topic. So here I am here to actually introduce the stock market to you all. But as a finance undergraduates, I hope that you all have the basics about the stocks and things. So I'm not going to go into detail on the stock side, and I will go through from there onwards. So today's this session, actually, I'm planning to introduce Columbus Stock Exchange and the process of opening CDS account and the present situation, what's happening in our market at this point, and the factors affecting the changes in prices, stock prices. It's actually one of the most research topic actually, and maybe for you all to consider these for your research purposes in the future. So that may be a beneficial thing for you, and why invest in CSE and some success stories. So that's the overall picture of what I'm going to do today. So to start with, why we need to invest. So these are the things actually why we need to invest. There are so many reasons, and some are here. So if you are familiar with, so the options you have for investment, I hope you may be familiar with these things. The bank deposits, fixed deposits. When it comes to bank deposit, normally the fixed deposits you are familiar with, and nowadays people are mostly dealing with these overnight deposits or these money market accounts. So that also becoming a familiar thing now because of the higher interest rates, and treasury bills and bonds. Maybe because of the ticket size is not achievable or not available for everyone. You know, treasury bills and bonds, you may have heard about this even from your school days, but when it comes to real life, most of the primary dealers who are handling these treasury bills, they expect a minimum investment of 1 million rupees to start with. So there is a entry minimum requirement there, and then unit trust. Unit trust also nowadays, people promoting this. Unit trust is actually, there are two ways: fixed income based also there and equity based also there. So unit trust actually, basically, if you want to give a small intro on unit trust is actually pooling the funds, and someone is managing the funds to invest somewhere. So company can collect your monies, they can gather, they can pool the money, and they invest in equity securities in the stock market, or else in the government securities, or kind of a mix. It depends on the particular unit trust. So people invest in that, so you don't have to worry about the management, they will look after that. And then it's a common thing, people invest in land and vehicles. And then gold is a common thing. Recently also people paid attention to this in January, February month, because most of the people had an idea that rupee is going to get an impact or get a blow in the early months, January, February months, actually, because of the country situation. Some investors had that idea, so they invested in gold at that time. Even time to time, people invest. And EPF, ETF, the people who are working, whether you like it or not, you have to contribute to the EPF and ETF. It's a fund and it's for your retirement benefits. And life insurance is also considered as an investment opportunity. And then it comes to our topic, equity shares. So after all these options, still people coming to this because this is having some speciality. So we are going to see what is there. So when you're investing in the equities or stocks, the benefits you are getting is capital gains. So it's like buying and selling. So again, like a asset, vehicle, or whatever you're buying and selling, you are getting a capital investment, capital gain when you're selling. So equity securities, you are getting the other benefits like dividends. So it's like a basically like a interest income, but not exactly. Dividends, actually, whenever the company makes profits, they do pay that. So basically, you know that stuff. And then right issues. So right issues, actually, as a equity investor, you are getting a benefit from trading the rights and investing in the rights. Investing in the rights in the sense, as a shareholder, you are getting the rights to apply for new shares. So to increase your contribution to the particular business. So that side, rights issues. So you're getting the share normally, majority of the cases, about say 95% of the cases, you're getting the rights below to the market price. So when you subscribe, you're getting the capital gain also there on right issues. Other side, the trading benefits there, and capitalization of reserves. This is we are getting bonus shares or additional shares. I hope you all may be familiar with the terms capitalization of reserves and rights issues. I hope so, right? So that another benefit. So what happens in capitalization? Now say you are having say 100 shares, you are getting maybe 10 shares or 5 shares or whatever based on the company's offering. Actually, you're getting the share, and with time, when the company grows, your value of the share also grows. So your income level increases with time, although your asset size increases with time. And the other key area is the liquidity. If you invest in a vehicle or a land, it's not that liquid. If you want it, if you're a cash urgency, you won't be able to get that converted into cash. It takes time, and some considerable volatility is there, and depends on your urgency, the urge for money. Actually, sometimes you may have to sacrifice some of your value when it comes to converting a fixed asset. Even gold, actually the same situation. But equities, actually, you are getting the chance less affected, but still, actually, when you want to sell the share, you have to sell it to that particular day's market price. So they are actually depends on the situation. If the market price is lower, then you are having a loss. But most cases, the liquidity, that is, at any given point, you can get that converted into cash. So that's one attractive thing on investing in stocks. So now we are coming to this topic, Colombo Stock Exchange. So what they do, actually, they are creating a platform for the people to meet. So, basically share trading, when the company issues initial shares, that's called primary issue. So company selling the shares to the public, and after that, once they buy the particular stock from the company, after that, there is no relationship between the company and the shareholder. They're getting other benefits is a different thing, but company will not buy your shares back and give you cash. So you have to sell it to someone else. So you have to find someone else to transfer your share and get your money. So for that purpose, stockbrokers are there. So to create a common platform, the stockbrokers joined together and formed the company called Colombo Stock Exchange in 1985. So it's a collaboration, or it's a joint collaboration, created this thing in 1985. So these stockbrokers created a common platform for them to transfer the shares, so that create kind of a more liquidity for them without just limiting to one particular stockbroker. It's now all the brokers coming to the common platform. So it's created as a limited company, guaranteed company, and there are 15 member firms. So they are the shareholders of the CSE, or they are the owners of this Colombo Stock Exchange. They are the founders. They are the ones who initially created this Colombo Stock Exchange concept and the business. And in addition to that, nowadays, there are another 10 members. So 10 companies are there. They actually not having any ownership rights in the business of CSE. They use that platform for trading for the benefits. And in addition to that, there are 4 trading members. So they are also not having any ownership on CSE, but what they do is they do trade on debt securities. When it comes to stock exchange, in the stock exchange, equity shares are also traded, and debt instruments as a corporate debentures are traded in the exchange. So these 4 people are allowed to deal with only the debt instruments. That's a corporate debentures only. So then if you see the board of directors, that's the management of the Colombo Stock Exchange. There are 9 board directors, 5 members from the 15 stockbroker companies. They appoint that 5 members from their side, and another 4 members coming from government side. Governments do have some interest in the stock exchange for the regulatory purposes, so they appoint 4 members. So altogether 9 members running the business or overlooking the business of Colombo Stock Exchange. And the entire business process is regulated by Securities and Exchange Commission. So they are on top of stockbrokers and then CSE, and again, they are above that level. So stock exchange is the one regulating the entire industry. The CSE also have a subsidiary called Central Depository Systems. So as I said earlier, the CSE's concept, the concept behind the formation of CSE is to bring everyone to common platform, right? So when it comes to the accounts, if you see like a bank account, you're opening a bank account in a one particular bank, maybe commercial bank or maybe People's Bank or something. So that account is limited to that particular bank. So as I said earlier, once a company issues shares, you have to transact the shares. So you don't know who the buyer and to whom I can sell. So everyone should come to a common platform. So all these accounts should be with the common party. So for that concept, this CDS is formed. So whoever or wherever you go and open your account, end of the day, that account is with CDS. So CDS is a common central party. They are maintaining all the records and the data. So all the stockbrokers, they are having their own clients. They have unique identity for each stockbrokers. But end of the day, everything comes to one particular entity, that's CDS. So they maintain the records of shareholders, the company details and everything, and also acting as a central clearing part of this transaction, also handled by the Central Depository Systems. As of yesterday, 292 companies listed in Colombo Stock Exchange and 1 fund. This fund actually not available for trading because this is actually already they announced the liquidation, but still it's listed in the exchange. They have to make some final payment. So for that purpose, it's still there. And other than that, there are 292 companies listed as of now. So as of now, no any funds available for trading in the market. And all these 292 companies are classified under industry groups, 20 industry groups. Anyone here familiar with the term GICS? GICS? At least heard of this name, GICS? Because I don't want to have a lecture here. I was also a university student. I know how this was. So better if you can, someone raise your hands and participate would be better. I think it's more efficient then. Otherwise, no, right? No idea. Sector classification? At least people who know that companies are classified into sectors. Okay. Anyone familiar with the equity valuation? Finance students? Basic stuff. I'm not going to ask questions on that. I'm just asking at least some basics. Oh, you all are first year students. second years also, but not yet learned the thing. Second and third. So third year you should have learned the thing. No? DCF, discounted cash flow, at least a name. Okay, anyway. Be cool, relax, no worries. Basically, you know the term discounted cash flow, right? Okay, fine. So to do a valuation, you need to know the base. You can't just take the P&L and you can't put the numbers and you can't do a forecasting and finish it off. You can't do such a way, right? You need to know where you are working, the ground. So actually, you need to have a comparison. So you should know, say, for example, you want to analyze a company, so you should know what they are doing and who are their peers. I mean, the companies who are in similar nature of business. For example, if you are taking a bank, you need to know what are the other banks who are most close peers. Peers is actually the mostly same size, so same kind of a business, right? For example, if you are taking a paint company, then you have to find another paint company to compare with. So that's where this sector comes. Otherwise, you have to analyze all these 292 companies to make a judgment. So this sector helps you to compare a company with the most close peer. We don't have exact peers in Sri Lanka. Actually, our market is very small. Even I think in this Kiribatkode area or this Kalani area, you may have 1,000 companies. But in our stock market, only 292 companies listed. So the companies are big, but we don't have much choices. If we have about 10,000 companies listed, actually, then we have enough and more peers. But here, not so. Actually, India and other countries having such big markets, so they have a different thing. So anyway, we'll come to the topic. GICS, Global Industry Classification Standards. I think you will study in the coming years. Oh, I don't know. The term called Global Industry Classification Standards. So this is a global practice created by the Standard & Poor's and with the collaboration of MSCI Index. So they created a methodology to classify the companies into sectors. So it works like this. The GICS is the top. This is the industry. Sorry, this is the classification method. And under this, there are 11 sectors. Under sectors, we are having 24 industry groups. So this is what we are using in Colombo Stock Exchange. Under 24 industry groups, there are 69 industries. So it's sub-classification. So as I said, if we have 10,000 companies, then we can't work here. We may have to go to the next level, or maybe here. Since we are having only 290, we are working on the top level. We are having very limited number of sectors. Right? I hope this is clear for you. And for these 24 industry groups also, we don't have companies for 4 groups. So we are working with only 20. The other 4, the new company should come to the market to fill that particular sector. So, right. I hope this is interesting for you all. And if you have any questions, you can please ask. And basically, I hope you know these things. Ordinary voting share. This is, I hope you know, right? Ordinary voting share, or do I need to explain? No, right? Okay, otherwise this will become a 3-4 hour lecture, right? So ordinary voting shares and non-voting shares, the difference between ordinary voting share and non-voting share on an annual general meeting or an extraordinary general meeting, you are not allowed to vote. The voting right is not there, other than all the benefits are there for voting. Sorry, non-voting shares. Voting shares are the ones having voting and non-voting actually having all other equal things than voting. Preference shares is actually issued for a special purpose. It can be redeemable. So that meaning at maturity, maybe 5 years or 10 years based on the terms at issued. It will get converted into cash or maybe converted into normal equity shares. So that actually involves some conditions, so preference shares. So that's treated as a what? Any idea? Preference shares, close to a debt instrument, right? And then rights issue. Rights in the sense the companies for their short-term, immediate cash requirements. If the company wants to raise some money within a shorter time, maybe 6 months or 3 months or something, then they go for a rights issue. And if they forecast the future cash flows, and if they want to raise maybe after 2 years, if they want to raise some money, now itself they are calling for that particular thing that is called warrants. It's a little longer tenor, rights are shorter tenor. And then units, unit trust, as I said, people pooling money into a maybe a company or something, and then they are investing. So that particular business, the money is actually broken into pieces, and that pieces are called units normally. And other thing is the over-the-counter market. So sorry, debt instruments. There's a small issue here. There's another point here, corporate debentures. So in addition to the equities in the stock market, you can trade corporate debentures. Corporate debentures are the debt instruments issued by companies to raise funds. So that have a clear maturity, maybe 5 years, 10 years, like that. So that debentures do pay interest, that's called coupon rate, and they do trade on stock exchange. And then something called over the counter. So it's a new concept actually. It's closer to these derivative products, but not a derivative product. This is actually over the counter in the sense actually kind of a repo transaction. If you want some cash, short-term cash requirement, you can give your security and get that cash, and then you have to pay the cash back to the person, and you have to take your security back within a time. So it's a pre-agreed terms are there. So the over-the-counter facility also now introduced in Colombo Stock Exchange. And now, when it comes to the account opening, you can go to a stockbroker. They have some set of forms. You can fill the forms, and you can open the account. This is the practice up to say 2019 or 2020. And after that, now actually with digitization, thanks to COVID, now actually we are having this mobile based. So there is an app called CSE mobile app. You can download that to your mobile phone, and you can open your CDS account through that. So there are some other back office forms involved in this process, and it's not a big thing, but compared to the previous case, like filling set of forms, maybe 25 or 30 pages, it's very convenient for investors to deal with. So now things becoming more and more easy and more digital for everyone to participate. And market actually, as I said, 292 companies are there. So every share is having different price, and shareholders paying different attention for each share. And on an overall basis, to understand what's happening in the market, there's something called index, all share price index. So this is actually giving some idea about the overall market performance. So this index creates actually, this index is created based on market capitalization, and now it's actually adjusted. So now this works like this. They are taking a company, there are a number of shares in issue, say for example 100 shares of something, for example. So from that particular issued number of shares, some percentage belongs to the public shareholders, and others belongs to the controlling shareholders. Controlling shareholders in the sense actually the people who are having the say or having the control over the business. And there are people who don't have any control, they are just shareholders. For example, if you are a shareholder with say 50% or 60% shares, then you can ask the directors to do the things in favor to you, or you can involve in the transaction. Even you can change the directors, so you have a control over the business. But when you have only 1% or 0.5% shares of the company, or even lesser amount of shares, you can't do anything. You have to just follow whatever they decide. So that's called minority interest or the public shareholding. Public shareholding. So this index actually, earlier it was market capitalization based index. So that is the bigger companies having a bigger percentage control over this all share price index, or the bigger contribution to the all share price index. For example, in the news, if you're not familiar with the market, you may have seen in the TV or newspaper or something that every day they say all share price index up by 200 points, down by 200 points, something like that. Every day you are seeing that. So that 200 points or 100 points, how that comes is from this calculation. So individually, each company is having some contribution to the index. So that's a little complex process, but not that hard. Basically, the mechanism is this. float adjusted market capitalization. Number of shares multiplied the price is market capitalization, and it's multiplied by the public float. So for example, in a company, let's say 5% belongs to public, 95% with the owners. Then number of shares multiplied by the particular share price into 5. Because we don't care about the 95%, that's with them. So as a normal shareholders, what the other shareholders having is only 5%. So in that particular company, the contribution is calculated in that basis, right? So in addition to that, to avoid any extraordinary fluctuations or the impact on the index, is the calculation is limited to 5%. So that meaning on a particular company, let's say John Keel's, relatively a highly liquid company, higher public holding company, or any bank, commercial bank or HNB or anything, they have, compared to others, having more public floats, more percentage of shares are with the public. So as I said, number of shares multiplied by the price into the public float may be 80% or even 90% when it comes to the commercial bank. Just for example, I'm saying, right? So when the index calculation, they may have a higher contribution to the index compared to the others. To avoid that, they are having a limitation. The maximum contribution can be 5%. So this actually for your academic purposes. Otherwise, normally I don't discuss all these things because investors not interested in listening these things. I hope maybe when you're doing your research, these things may be beneficial for you. And so that's how this all share price index is calculated. So basically, all share price index reflects the overall market movement, whether the market overall investors are positive or negative. That kind of sentiment we can identify from this market all share price index movement. And there's something called total return indices. So normally this first one, all share price index, is calculated based on the market share price movement, only the share price movement. Total return index is actually includes the dividends. So when you're investing in stocks, as I said earlier, you are not only getting the price fluctuations, in addition to that, you are getting the dividend return also. So end of the day, what you're getting is dividend income plus the price movements. So those two together captured under this particular total return index. But normally it's not that widely used. It's not familiar to normal investors. People are familiar with this, the top one, all share price index. We call that ASPI. This CSE all is a Bloomberg code. If you're familiar with the Bloomberg, you can check that thing. And there's another index called S&P SL20. Same calculation method, but they have picked only 20 companies. The list is given here. There are 20 companies selected to form this index. The selection of the index is actually, it was decided with a collaboration of Standard & Poor's. So that's why this is called Standard & Poor's, S&P Sri Lanka 20, Standard & Poor's Sri Lanka 20. So they, with the collaboration of CSE or the joint work with CSE, they pick these shares based on some conditions: float adjusted market capitalization and single stock cap of 15%. Earlier I said 5% for all share price index. Here it's 15%. And in addition to that, these shares should meet minimum size, liquidity, and financial viability threshold. So likewise, company should make profits and it should have a minimum trading volume. So all those things are considered for this selection of shares for the S&P SL. So just say all the shares are under all share price index and selected 20 companies are in S&P SL. Normally we call that blue chip index. So what happens is some people to select shares actually, because you have 292 companies to select. So without going behind 292 companies, you can pick one of the 20 and invest. So that may be easy for you to manage your investments for that purpose. And also this gives some idea, some close idea actually, because compared to the big 292, this is with small 20. So that price movement actually gives some different signals for trading purposes and investment decisions. So that's why we need to have two indices. Otherwise, one is enough normally. So, okay, so now selecting shares, how we are going to select shares? As I said earlier, there are 292. When it comes to investment, opening an account is not a big deal. Download the app, fill the forms and send. Your account is ready. And if you put your money to the bank deposit, it's done. Money is there. How we are going to select the share? So that's a big question. Sometimes after maybe a few years, some of you may become an analyst like me, and then people will call you and ask, what is the share to buy? Or maybe an investment advisor, anything may possible, right? Fine. So normally for an investor, you can call your investment advisor and you can ask what is the best share to buy. Based on their advice, you can buy if you don't have the finance knowledge. So if you have the finance knowledge, you can do your work. If the investment advisor, if they recommend you some shares, you don't have to just take that. You can do your research. So you need to know the factors affecting the share price. Any idea, any factors? What can be the factors? Any fact, that is one answer, please. Factors that can affect the share price. Legal factors. Yeah, fine. Okay. Government thing is, we can take that as a political thing, right? Political factor, one good answer. Anything else? Say something, otherwise you will feel sleep. I said no, in the beginning I said, so I have the same experience. I was there in the same audience like about 10 years back. Same experience, don't worry. All same actually. Only a year changed from 2008 to now 2022, but same thing. Fine. Any other answer, please? Someone. Volunteers. I'm trying to keep you awake. Any volunteers, please? No. Inflation. Good answer. Thank you. Stock price, I don't know, right? I mean, it is, but stock market is actually, we are working on daily basis. Today it's moved up or down. Tomorrow what's going to happen? So very. Okay. Anyway, thank you for the contribution. So we'll come to that later and do the homework. As I said, the DCF calculation or any other calculation like PE, PBV, and there are so many other calculations. So to decide whether the share is worth buying or not, right? So the methods, technical analysis, as he said in the introduction, there are methods to do valuation, to select which company to buy and when to buy, at what price to buy. So all these things, you have two major different methods. One is fundamental analysis that you will learn if you are a finance graduate, I mean undergraduate, especially the finance. If you will definitely learn that thing, fundamental analysis. And the technical analysis, I don't know whether this is in the university curriculum. Technical analysis, actually, it's based on the charts, past price movements. We assume that the patterns will repeat or the past behavior will repeat in the future. So based on the past price movement, we are trying to predict these future price trends based on some mathematical equations or mathematical functions, right? For example, MACD is, I don't know whether you are familiar with the term moving averages. No math students here, right? So we'll not go into that detail. So technical analysis, let's say there are predefined tools. It's fully automated, software based. So you have to just use the software, but you need to know how to use the software and what are the tools, what are the headings. If you have a mobile phone, you need to know which app to use for which purpose. So same technical analysis also is software, predefined, but it gives a better idea to trade without much hassle. If you want to do a fundamental analysis, it takes months sometimes to do the full detailed analysis. You have to do a sector analysis, company analysis, and economical analysis, and so many. So it takes sometimes a month or more. But technical analysis, within minutes, you can look at the chart and you can say whether this company is good to buy or not. So the different thing, different concepts, different purpose. But these two are very important. And then investment decisions. So based on this, now actually our case, we combine this together, fundamental plus technical, to make decisions. There are analysts, I don't think whether it's applicable to Sri Lanka, but overseas foreign countries, especially the American markets, you can do trading purely with technical analysis. You don't need to know the fundamentals. You don't need to know even what the company is doing. But just by looking the charts, you can do trading. So that much advanced. But you need to know how to use the technical tools. So that's the thing. It's like you're having a latest car, but you need to know to use the technology there. Otherwise, you will just drive the car to your home and come back to office. That's all. You're just using to transport. The latest cars are not designed for that purpose. There are some other things. Fine. Okay. So when it comes to technical analysis, this is just one thing. Candlestick patterns. I'm not going to go into detail. So, you may heard about the chart patterns. There's something called line chart. So that's from all levels. So even middle school, we learn the line chart. That is plotting a chart with price versus time. This particular thing called candlestick pattern, instead of a line, we are using candlesticks. This candlestick gives us some different information. So based on that patterns, we can decide whether to buy or sell that particular share or the index. So that gives some idea. And valuation things, actually, you will learn. It's not the topic here. So then actually we are here. What's happening now in Sri Lanka? The stock market. As he said, there are factors affecting the market performance. So this is actually, this chart is plotted from January 2nd, 2020 till yesterday. So this was started in 6,111, the index, when it starts in 2020. And yesterday it's 7,777. Anyone knows what's the index today? Anyone at least anyone invested in the stock market? 1%? Hope all are over 18 years of age. So to invest in stock market, only eligibility is you need to have 18 years of age. That's all, nothing else. You can start investing in with even 100 rupees. You can deposit the 100 rupees to the bank account and you can buy shares. So that's the only entry requirement. Anyone? No, right? Some people may be like me, knowing everything, but not interested. Why we should say to this person, right? Okay, fine, don't worry. Right, okay. Today's closing, 8,000. It's a good number, right? 8,000 is a fancy number. So we'll see how today, actually, after 6 days, today market closed positive. So we are also doing the program here on a positive day, actually. So let's see how things going to be in the coming days. So welcome you all and invest in this market. So anyway, coming back here, these fluctuations can be justified with some reasons, can be political factors, economical factors, and some other things. We'll come to that. So this is a movement here, and the red color line is the S&P SL price movement, and the blue color one on top is all share price index movement. As I said, this is with only 20 companies, and this is with all listed companies, but you can see the pattern. It's a very close direction, or both the graphs actually having a close pattern. When one index moves up, the other one also moving up, and when it declines, the other one also decline. Maybe because of the Sri Lankan, the size of the market, as I said, the all good companies are here in the S&P SL index. So they have some considerable impact on the all share price index also. So that reflection we are seeing here. And this is monthly turnover and average daily turnover. So this actually, again, we have plotted this from August 2020 onwards. So average daily turnover in August, it was 1.8 billion rupees. It has increased to 10 billion rupees by January 2021 and then declined. And recently the highest was 8,700 million or 8.7 billion per day. 8 billion rupee turnover per day. Total monthly turnover was about 157 billion in January 2022. This year, January, this was 157 billion. And now we are in November. Last month, we have this data up to October. October, it was 2 billion. So compared to here, 1.8 billion in 2020. Now still this is 2 billion per day, but this November actually is slightly lower than this because of some other reasons. I'll come to that. So what I'm trying to say here is now actually the Sri Lankan investor participation is increasing. Anyone having an idea of how many Sri Lankans are in stock market? Any percentage, any numbers? Out of the total population, how many of them are in stock market? Any idea? You had to learn a lot. Okay, maybe at least the total population of the country. Any answers, please? Population of the country is a simple question. 20 million is an old answer. It's not the answer. Tell, please, Ken. I think people are not in the mood, right? I don't know why. Okay, fine. 23 million population, and I think having about, say, 500,000 accounts. Not even 1 million accounts. So that much small. So there are enough and more room for people to participate and do things. Now, because of the digitization, more people are participating in the stock market compared to the previous. Right, and stock market is actually sensitive for macroeconomic conditions. As I said, GDP, the gross domestic product, actually not in Sri Lanka, foreign countries, the stock market can even impact the GDP of the country. When the market is positive, people earn more money. When they earn more money, what they do, they spend. When they spend more money, economic activities will increase. What happened in Sri Lanka early 2020s? The new government came, they reduced the taxes, they reduced the interest rates. So people had more disposable income. You don't have to pay taxes and you have low-cost finance. So when you have more money, you spend. When you spend, actually, activities increases, more businesses are functioning. So GDP increases with that. When the people feel bearish, they don't invest in businesses. So the new businesses, actually not like in Sri Lanka, foreign countries, they get more companies listing, and it's like throughout the years, listings are coming. So when the people are bearish and not in an investing mood, actually, then they may not invest in businesses. So that side is a negative thing. And when they're bearish, they are losing money. So they will cut down on their spending. So that affects the GDP even. And also, stock market is a leading indicator. So based on the stock market performance, we can judge that the country's economy is about to face a trouble. For example, what's happening in the US markets now? US markets declining from when? April, May onwards, from the Russia-Ukraine war started, the moment, or the things after Russia-Ukraine war. I hope you all know at least that there's a war happening between Russia and Ukraine. At least smiling, thank you. So after that, actually, people having worries. Why people are worrying? Now people, you know, right now, thank you. Because of Russia and Ukraine fighting, why we bother, or why Americans bothering about that? Why? Quick answers, please. We don't have enough time, ne? Please, someone. Because of they are fighting in their land, why other countries bothering? They don't, Russia, they do produce fuel, right? Okay. Anything else? Why we bother? Do we export tea? To whom we are exporting? Russia. And other thing, wheat flour, wheat grain, we are importing from where? Ukraine. We are importing grain, wheat from Ukraine, and even the animal feed. So when they have war, we won't be able to get their shipments on time, and it's becoming costly. So that's affecting everyone. The other side, this fertilizers. Fertilizers are largely produced by the Russian and especially Russian region. So when they have war, that also cost-wise increasing. And other side, as he said, for the European countries, Russia supplying gas, so they are stopping the gas supply. They are threatening because of the political thing. So this is a different thing. So all those things actually, market already started to decline. Now people saying that recession is going to come, and now exports, even we are having worries that Sri Lankan exports may have a hit in the coming days. So likewise, things are changing. So stock market actually leading indicator. Fine. Right. So here, factors affecting the stock market: supply and demand. When the people have more money, they buy shares more and more. So demand side increases. And when they feel that something is going to happen, they try to get that instruments into cash. So sell side. So supply increases, price may decline. So supply and demand is a major part of stock market. And the company related factors. For example, after rupee depreciation, our tea prices increased. If you're buying tea in the market, you may know that the price increased. We are producing tea, but we are paying more to buy our own tea in Sri Lanka. That's because we are exporting more tea, and the high quality ones also we are exporting. So when there is that side, there's a demand happens, the local supply also get adjusted to the particular price. So company related factors. So when the tea price increases, the companies who are dealing with tea making more profits, the share price of those companies increasing, for example only. Investor sentiment. So likewise, I said, how the people think. If they think that economy is going to do bad, they may take a different decision, and other way also. Interest rates. Interest rates are a very important factor. When the interest rates are low, people invest more, and when the interest rates are high, people try to save. They don't spend. And the exchange rates. So that do impact on the company performance, and the political factors again affect the investor sentiments and any other things, current events, and the natural disasters, for example. Right. So these things affects the market performance. And another thing, this is also an important thing, business cycles. I hope you're familiar with the term business cycle. Economies do trade, economies perform in a cycle, time to time actually. Government is making these fiscal and monetary decisions to manage the economy of the country. I'm not talking any jargon, right? I'm talking very simple things. Monetary policy and fiscal policy, everyone must know this. At least A levels, you should have studied these things, basic stuff. Right, so based on the government decisions, this cycle works. Not only that, that also a reason. So we should know where we are now. When you are investing in stock market, we should know where we are, whether we are on the peak or where we are on the trough, or we are in the expansion side or contraction side. Any idea where we are now? Say louder, please. Trough, somewhere here. Any other answer, please? Contraction, correct. Contraction. We don't know whether we are here. We are somewhere coming down from a peak. We will come to this point, and then we will move to the next. Definitely, we will come here, and this will also happen. So in the stock market, actually, some investors behave like that's the end, but not so. This cycle, you should understand that this cycle is a never-ending process. This happens for ages. This will happen now, and again we will see a trough. I mean, after if we come out from this recession, we will move to this expansion, and at one point again this will happen. Fine. So investors' behavior is this. Normally, when the market starts, some people even pray. So once it starts, they start to cheer, and at one point they become greedy, and market will turn down. As I said earlier, it won't go up and it won't go down. One point it will turn the other way. So at this point, now we are here. We had all the fun up to January and February, and now we are here, and we are almost near to the trough, as we said. So now the people actually who are starting investment or who are about to start investment actually are in the right place. Or you may need to some more time, you had to wait to get the correct point here, but nobody knows where this exactly lying. After this happens only we will get to know that this is a trough once we come to this correction phase actually. So but I can say that we are completed at least half of this recession side, and we may see another half, or maybe we are closer to the trough. So good time for you all to consider investing in the market. And this last 10 years, so last 20 years, this is how the market performed. All share price index, this is how it performed over the last 20 years. You can see started somewhere 2000 index, all share price index somewhere 2000, and it moved up. Again, witness a crash here in 2008, 2009. That's the end of war. And after that, in 2010, it peaked to somewhere 7,500 levels and witnessed a decline and some correction phase, and now increased to some 13,000 levels, and again now declining, and correction process is happening. Once this process is over, we will see another uptrend. So the cycles actually work here, and overall there should be an uptrend. We are seeing an uptrend, but in Sri Lankan case, it's not that sharp. So that meaning over the years, last 20 years, even after the war, the market still not correctly reflecting the price. So once the corrective steps are taken, we may see a better market in the future. And other thing, the factor affecting the market is this treasury bill movement, the interest rates. Mostly interest rates, actually central bank deciding the interest rates through the monetary policy. So based on that and the requirement of government to raise funds, actually this treasury bill rates changes. So with the policy rate change, hope you all know the new governor, Mr. Nandalal, once he took over the office, it was somewhere here. Sorry, it was somewhere here, around 14% levels, and it suddenly went up to 20% rate with a policy rate change. They took a tough decision to increase the policy rates. So after that, the rates went up, and now it's lying at 33%. So if you see the history from 1990 onwards, all share price index move. Sorry, this is the 3 months treasury bill movement from 1990 onwards. We had a recent peak in somewhere 2007, 2008 time. That time also we had a similar case. I hope you all know what's happening in the country for the country's reserves. We are having near zero reserves, right? So this kind of a situation was happened in 2007-8 also. At that time also IMF and other India, especially India, came for our support, and we recovered from there, and interest rates came down to 7% levels in 2009-10 after end of the war, and it was at somewhere 7 to 10% from 2009 till 2020. And after that, again, we are seeing the currency crisis or the reserve, especially balance of payment crisis. Now, because of the unfortunate situation, now the rates are 33%. This is not going to last for long. They should come down. So when this starts to come down, the economy will turn up. Now the recession, the negative cycle is going on. So this is some signals actually. The first, interest rates should turn down. Then that signals that economy is going to do well. When the interest rate comes down, people have more money to spend. That works the other way. And you all heard about yield curve. Familiar with the term yield curve? Not sure that I'm doing a finance lecture, no? Fine, okay. Forget about that. This is secondary market trading. As I said, you can buy and sell treasury bills. Central bank is issuing the instruments and you can buy from the central bank through a primary dealer. After buying, if you want cash emergencies or anything, you can sell it back to someone, some other party. So like a share trading, after company issuing the share, we are getting the shares and we can sell it to someone. So same way, common instruments also works. So currently, longer tenor interest rates, that's about 10-year, 15-year interest rates are lower than the short-term interest rates. So this is called inverted yield curve. Normally the yield curve should be the other way. Shorter term should have lower interest rates and higher tenor having longer rates. Why? Longer tenor having more risk. Shorter term having relatively a lower risk, and when the maturity increases, the risk increases. So investors demand for higher rates. So that's how normally the yield curve should be. Longer tenor should be higher and shorter tenor should be lower. This now other way. So this is called inverted yield curve. This is normally a signal of a recession in the economy. So that's we know. Fine. So other thing is a consumer price index from about 2015-16, after we adopted the inflation targeting mechanism. Central bank took a decision to go for inflation targeting. They, through managing the interest rate, they managed the inflation. It was kept between mid-single digit, so that is 5% to say 7-8%. So it was managed up to 2020, and after that, 21 up to 21 even we were safe up to here September. After that, now they started to peak. Another question: what can be the major reason for this increase in inflation? We are having how much? 70% inflation. Yesterday there's a slight downward correction. National Consumer Price Index from 73% declined to 71% roughly. From 6% to 70%. What can be the major reason? Yes, rupee depreciation. From 200 it went up to 300 and how much? 70. Somewhere 360 something. So that steep depreciation, because as an import dependent country, we have more impact from that. All the cost of imports went up, and end of the day we are facing this crisis. So now we are nearing the end. Some successful stories. Hope you all may be familiar with the two phases. The first one, with him only we started this presentation today. Our friend took his quote, I remember, maybe Warren Buffett. So actually, this is a world famous investor, and the other one also you are familiar with this space. Sudhamika Perera, one of the big investors in Sri Lankan stock market, and he is famous for reviving businesses. And here I have given some other world famous investors. So they have different methods. The success behind these people are different. Some actually are good in selecting shares, some are good in fundamental analysis. Likewise, so when you go through this, you will understand how so it's actually first you should understand where you are strong. If you are strong in technical analysis, you can select that side. If you are a fundamental analysis person, you can, and you can also be a psychological person. There are people, they don't know anything, they don't know technical analysis, they don't know fundamental analysis, but still they pick the right share because they can understand the human psychology. Normally sentiments, actually market driven by sentiments. When the investors starts to talk about stock market compared to the previous or higher, when they start discuss about stocks market, that meaning market starts to move up. When the market is down, people not bother about the stock market. When the market starts to pick up, people start to talk. When more people talk about stocks, we have to find what are the stocks the people are generally talking about. Then we have to follow those stocks. If you find that is having some potential, you can invest. So human psychology works. So different things. Basically, for our case, actually, we can say fundamental analysis at this point, especially in a recession situation, this is a good time to do fundamental analysis, and you can pick the right share. And if you invest, you can even multiply your return, not just 1 time, 2 times. Some cases it's 10 times. I will tell you a small, simple example. In 2011, this commercial bank share, just for an example, right? Commercial bank share. Commercial bank has issued shares in the stock market, for your knowledge. That share was trading at 120 rupees. Do you all familiar with the term net asset per share? Hopefully, yes, right? Net asset per share. By that time, net asset per share of the company was somewhere 70 or 80 rupees. When the share is having 80 rupees net asset per share, the share was trading at 120. So that is, we call price to book value 1.5 times. Right? Now the same commercial bank, it's trading at, any idea the price? 50 rupees. But net asset per share from 70, it's now close to somewhere 180. Company has grown over the years. Number of shares also increased, but still they have good growth actually. And over the years, last about 6-7 years, continuously, I remember they paid 6 rupees and 50 cents as dividend. That particular share now trading at 50 rupees. Why it's trading at 50 rupees? Because we went, Sri Lanka for the first time in history defaulted the foreign payments. Our bond payments, we defaulted. So country become a nation title with default. The default title came onto our face actually. The default term came now, but after East attack from 2019 onwards, we started to face these issues. Foreigners actually, they put a label on Sri Lanka. Up to say 2018-19, we were some kind of attraction was there with the foreigners. Foreign investments were there. So as I said, the Sri Lankan participation, the Sri Lankans who are participating in the stock market is relatively small compared to the other peers like India or other countries. Their participation is high. Now only we are doing more awareness programs and more people coming to the market. So now participation is increasing. So when more people are in the market, actually the market grows. So because of the internal issues, if you see from 2019 we had East attack, 20 we had COVID, and again 21 it continued, 22 balance of payment crisis. So at a stretch, again and again a blow on the economy. So we came to this point now. From here actually we had enough and enough on our head. So time to come out from this crisis. So now you have to do the work, find the right picks. I just took this commercial bank for an example for you. There are enough and more examples in the market, good companies. I hope you all may be having a bank account with commercial bank at least. Some even may having credit cards. But people believe in the bank, go and make deposits with the bank, but not buying the share. In any case, if the bank goes into trouble, there's something called deposit insurance. I don't know whether you all know the thing. If any company falls into trouble, especially the deposit taking business, government will pay you some 1.2 million. Say if you have 10 million there, then the other thing you may have to forget. So if you believe that the bank will not go into trouble, it won't go into trouble, then you can invest in the market. Don't take the commercial bank as my recommendation, right? I'm just taking for the easiness because everyone are familiar with the term commercial bank and the business. So that's why I'm taking that. So here actually, my point is actually, if you make the right decision and if you make your investment at the right time, you can earn much more compared to any other investments. So for that, actually, you should be smart enough to select the right share at the right time. So you should first decide whether this is a time to buy or to wait some more and buy. But I'm sure nobody can take that exact perfect decision. That's very hard. It's not easy, but up to some extent, you can make a decision. With a small investment, you can give a try. Right. This is just an example. Buy straw hat in winter. This is the straw hat. This is not exactly the straw hat, but let's say this. This is actually a foreign thing. So they do have winter, but in Sri Lanka we don't have. Actually, a difference, our Sri Lankan mentality. I just wanted to share this. This I learned when I was in the university, so I just want to share with you all. I don't know whether you are familiar with the thing. Major difference between a European and a Sri Lankan. Europeans, they think long term. We don't think that way. Why? What's the difference? Our Sri Lankan case, we are just comparing with one American citizen or a European. I mean, the countries who are having winter. What's the difference? Any idea? They have the winter, so normally about 4-5 months they won't be able to go out and work, so they have to prepare for the winter during the summertime. So always from ages way back before this technology and things comes, still they have an idea of saving for the future. But in Sri Lanka, throughout the year we have enough and more food, so we don't bother about saving, or we don't bother about our future. So that's why our Sri Lankan mentality, normally, so all the communities of Sri Lanka, they having this issue. So that also can be a reason that people are not coming to stock market. People, when they have more money, they put that into the fixed deposit and just wait, and not making risk investments. But foreigners, especially the ones who are having the winter issues, they have no choice. If they want to survive, they have to invest. So right, so I think we're nearing the end. So this particular case, actually, this particular investor has invested in technological stocks before the technology start to evolve. So the people who took that right decision actually won. Same here in our market also. There are, as I said earlier, there are enough and more shares having higher potential. But at the moment, people don't bother about those stocks. So I should prepare to pick the right one to invest. Even if you are planning to start a business, you should find a business that can get attraction after 5 years, or maybe in 3 years. Because in investments, when you make investment, it takes about 2-3 years to recover your cost, and after that only you're making your returns. So at that time, your business should be something different and should make some better returns. So the investment decisions, actually, so long-term basis, so prepared for long-term things. Yeah, so that's the end of my presentation. If you have any questions, you can ask me, please. And those who are interested, if you scan this QR, then you can access our website. And this is our Facebook page. We are uploading our daily reports. So that is on a daily basis, we are uploading the market information. So this is free of charge. Anyone who wants, you can spend some time and can get some idea about how the market is functioning and the latest updates on the market. Yeah. Okay, now. Okay, so this Facebook page, just follow and see how things are. And we do have a YouTube channel. There you can see our videos. We have some few videos actually. This videos gives you the idea of how to open the account and how to do trading, even technical analysis. We are giving an English presentation there. You can see how to do technical analysis, and especially this is for Sri Lankan case. Normally, if you can find enough and more videos in the YouTube, but they do speak about the foreign things, so you can get some idea. Okay, and if you scan this, you can download the CSC mobile app and you can open an account with us. Opening an account is free of charge, and as I said earlier, through an investment advisor, these two of our friends are here, Mr. Danushka and Mr. Mudita. So you can give them a call and you can make investments. Once you scan this, you can download the app, and there you will be directed direct to Asha Securities. Even if you wish, you can open the account with any other brokers. And so that's it. Any other questions? I like to see at least one question, please, someone.
So the current situation of Twitter, why don't know CS to recommend investing in CS in ASPs are going to provide ASA, and also the political factors and BOT factors are also negatively affecting all the business, and all the business are survival mode. So do you recommend us as new entrance to the events to CS? Do you recommend us to invest now that we like in the same like where the stock has been the winter like prices? So now the stock prices are low, but will it be beneficial for us? Or do you recommend us to invest in it?
Tough question, but as newcomers, I will say yes. Always we say invest your money that can be, you can invest the money that is not needed for you. Or actually, this stock market is a long-term investment, not a bank deposit. Bank deposit, actually, anytime you can go and ask the money, or you can use an ATM card and withdraw. Stock market investment is investment, not a saving. So the difference between the investment and a saving is this. As I said, if you are going to start your own business, you have to hire a place and you have to hire a few people and equipments and things. You have to start working. So that investment, even if that works as you plan, still there is something called what? Finance question. When you make an investment, there is something called what? No. The return, actually. I mean, how much time it may needs to cover up the cost. Payback period. How long it's going to take, right side. So same way, stock market also. Actually, just think that you are investing in somewhere. Initially, don't think about trading, and especially at this point, don't think about trading. Think about investments. And if you, by chance, if you get a return of say 15 or 20%, take the return. But think about say 2-3 years down the line, or maybe 5 years down the line, because you all are young people, maybe 22-23 years of age. So you're just starting, right? So select the right shares. And if you select and if you start buying now, after you go to work or something, you have foundation, you know. But because if you want to feel the hot, you have to touch and see. By staying away, you will never feel the hot, right? So just make a small investment. I don't say to put all your money. Small investment, maybe 1,000 rupees, or maybe if it depends actually, you know, capacity. Buy some shares. Not only, don't buy just one share for the starting purposes. Buy few shares, few different companies. Then once, since you have already invested, you will spend some time to think about that, right? So with time, you will collect some shares, some amount of shares, and some amount of an investment into that particular thing. As I said, we are already halfway into the recession. We are not on the top. We are not at the start. We are already half, or maybe even below to that. So there is some more room for us to go down to turn up. So once it starts to turn up, then you can increase your investment. So now actually, let's say market continuously going down, as I said, today you're buying some share for 100 rupees. Tomorrow it may drop to 90 rupees. Don't worry, buy more, but select the right share. End of the day, company will survive. What happening here is actually the people, several reasons. Some people, you know, buying shares on a credit. Well, normally when you are making investments, there's something called borrowed capital, right? Equity capital and the borrowed capital, debt capital. Equity plus debt is your total assets. So here also in the stock market, when the market is active and it's increasing, you may borrow money and invest. But when the market starts to decline, it's very hard to find where the declining point starts. People think this may change, and wait, and one point it goes beyond control. So by the time they have no choice, they have to clear their credit. So it's like you're starting a business and it went into trouble. Your bank pushing you to liquidate your business and pay them. That kind of a situation is happening in the Sri Lankan market now. Some investors who took little hard decisions to hold the share when the market starts to decline now actually have no choice. They are selling. Because of they are selling the shares at a very low price, it doesn't mean the company is in trouble. Company is doing well. As I said, commercial bank, the share which was trading at 120 in 2011, now trading at 50, meaning several reasons. Major reason is a foreign outflows. Foreigners who had the share, they sold at a very low price and they left. Right. So it doesn't mean the commercial bank is in trouble. They are doing very well. Right. So for your question, I may say start investing in small quantities now and wait for the right entry point. So by the time you may have, say, for example, you're having a plan of investing 50,000 rupees. Now you start with about 5,000 rupees for this month and put another 5,000 for the next month until the market starts to turn. So once you feel that it's turning, check with our people, they will guide you. Then you invest your balance. So by the time you would have learned something, how things are working, even if you make a loss, you are making a loss of about 10, 15 rupees. So it's not a big loss for you. So what I'm saying is it's a good time to enter and learn the process, how it's working. Because when the market is in peak, it's hard because they even are very busy. They don't answer your call. Now, since the market is low, they are having enough time. They will guide you. As I said, the volatility also lower because you can see here clearly. We were here, 13,400 points in January this year. And we are now here, 8,000. So nearly half. Many shares are trading. For example, Valuable One, there's a company. As I said, Dhammika Perera's big business. He is having two big arms in Sri Lankan stock market. One is Haley's Group, other side Valuable One Group, two big companies. So this Haley's company was traded at 140, today trading at 65. Valuable One, which was traded at 105, 110 rupees share, today trading at 30 rupees. But this business is still running well. If you go, you can see customers are there and they're doing well. But the share price, because of this, as I said, psychological effects, because when this was at 13,500 in January, no one ever thought that our currency is going to collapse to 400 level prices. People anyway, some people, there are voice raised by analysts and other people that we are in trouble, but actually general opinion, people not bothered. But when it comes to February, they started to believe that things are going wrong. So that's where the people went and bought gold, even dollars. We had a very serious crisis at that point. And now after all this, we came to here somewhere 7,000 and we managed to recover to 10,000. And now again, we are here. As I said, we had started from about 6,000 level in 2020. So we are now here at 7,000. So worst case, we may drop to some 7,000 level possible. From here, 7,700, we might see a trough. This point somewhere even lower here. But it will never go to 2,000 for sure. And even if the market goes to 2,000, say for example, you are investing in commercial bank, meaning the 50 rupees share may drop to 30 rupees. As I said, go slow. When it comes to 30, buy more. End of the day, bank will survive. No? But if you're buying a share which is on the peak, then actually you are in a risk. So for example, the share which was trading somewhere here, let's say 10 rupees, and now they're saying at 300 rupees or 400 rupees. Then actually entering that particular share is risk. So there you have to study more. But if you're not willing to study on these companies, if you want to just to make some investments, you can select the fundamentally strong companies. That is, if you believe that business will not going to get closed in the coming years, you can buy that particular thing. John Keels. I hope you have answered your question. Only these three people are talking. And thanks to that, thank you. Any others from this side? At least one question, please. Then we'll finish it off. 5:15. For our company, actually, we are dealing with software called Direct FN, but entry limitations are there because our what do you call this order matching mechanism. This is automated trading, right? So when the market is active, at one point, if everyone tries to access the there are problems. So that's why normally people discourage to give online thing. Direct FN. 500,000. Yes, that is as I said. So actually, if you have a CSE mobile app, actually now we are going to start investment, right? So end of the day, if you can see what is your stocks, what are your stocks, that is normally enough, right? If you want to trade online in this crisis market, I would say take the risk and make 500,000 deposit and do, because you're taking a high risk. But if you're thinking about long term, you don't have to monitor the share price movement on a daily basis. So in that way, actually, it's justifiable and it's protecting the investors, guaranteed. No, in the mobile app, CSO mobile app, they are giving the shares, so you can see your portfolio, but you can't trade. You can only see the things. If you want to trade, you have to call the advisor. So we are done. Madam, what do you think? I hope I would have done a good job. Yes, please.
In the market. They are not traded in like CSE, but they are in the market. Most of the youth are interested in those like in the and so why aren't there any regulations or coming up to the CSE on those?
We'll make it simple. Cryptos, forex, commodities. I don't think any Sri Lankans are doing commodity trading, so let's forget about that. So other two, forex, foreign exchange currency trading, and other one crypto. Crypto actually, in simple terms, cryptocurrency, Bitcoin is a famous one, right? So Bitcoin, there's no one controls that, but people call that there are only limited number of coins available in the market. So that's the advantage they say. But I said, for a country, there is something called monetary policy and the fiscal policy. Those two are very important to manage the country. If we try to involve with this, what will happen is we don't know where our money is channeled. The central bank or the government is not having any control over that particular thing, because you are buying some instrument that is beyond the control. Because even if we put some regulations, we can't control that, right? Because the internet is actually beyond the control of the government. You can do, I don't have to tell all these things, you know how to bypass this regulation. So actually allowing these things, actually already we are in a currency crisis that may affect the economy in a bad way. So that can be a reason that government not encouraging this. And also as per the latest Foreign Exchange Act, Sri Lankans who are not having foreign exchange income are not allowed to invest overseas. If you're having a foreign exchange income, if you are employed with a foreign employer, or if you're doing some exports or something, then you are getting foreign currency, then you are allowed to invest, because that you are investing your money what you have earned there. No? Otherwise what will happen is the money which earned by some other people, maybe the foreign remittances or our exports which are earned by someone else, you are putting that money again out from the country. So that should not be allowed. So I think that can be the idea. Once we come back from this crisis, and if we be able to build the reserves of say 10 billion, 15 billion, then can consider such thing. Good questions. I want to see one question at least from this side, at least boys, girls, anyway. So shall you wind up? One question. Okay, we'll wind up then. Thank you. Thanks for the opportunity and student council, right? Student association, yeah. So thank you, everyone. At least I hope you all would have get something from this particular presentation, and I hope you will start investing as a finance people. Just try something and don't be a typical Sri Lankan who are always risk averse. They don't like to take risk. They want to have secure life. Just try to do something and make something for your future. Because if you start invest now, when you come to the age of 30s or mid 30s, you have some decent good portfolio with you. Then when you grow, don't think about short term, always think about long term. Now if you are starting investing, meaning think about at least another 10 years. Yes, like a children's savings account, if you invest 500 rupees per month, say it will get accumulated. So likewise, so make a good decision at this point and think about long way. Don't go for short term gains. At this point is actually high risk. Always especially at this situation, go for long term thing. And I think for your academic purpose also, I think I would have contributed something even for your final year thesis and things. So thanks for the opportunity and wish you all the best. Thank you.
Thank you so much, sir, for your tolerance and for responding to each and every question. And thank you so much for making this event an interesting and a valuable one today. Hope this event has benefited each one of you here. And honestly speaking, today's session had a great impact on me, and I realized that returns do matter. So before moving on to the final part, I'd like to invite Ms. Sakunika Ratnayaka to present the tokens of appreciation on behalf of the Students Association of Financial Management for accepting our invitation and making this day a success. So, Mr. Danushka, I would like to call you upon this. And also Mr. Mudita Agarwal. Now, I cordially invite our secretary to Students Association of Financial Management, Isanka Yesmi, to deliver the vote of thanks.
Good evening, everyone. As we have come to the end of Investor 2022, it gives me immense pleasure to deliver the vote of thanks on behalf of the Students Association of Financial Management. My very special thanks to our guest speaker, Mr. Arumainayagam Visahan, the head of research at Asha Securities Limited, for a wonderful session on stock market and how to invest in stock market. I would also like to thank all the guests who are present here today, including Mr. Danushka, Manager, Asha Securities Kiribati branch, and Mr. Mudita Egodavatta, Investment Advisor, Asha Securities Kiribati branch, who helped us in the coordination of this event. And I would like to extend my heartfelt gratitude to our lecturers for their endless support and guidance. And also, I would like to thank our member committee of Students Association of Financial Management for their support, and as this event is a result of their hard work. And finally, I'm very happy to thank all the our students who are present here today for your participation. Thank you.
And with that, we bring today's session to an end. And thank you again, sirs. And thank you all very much, and have a wonderful evening.